Alphabet spells out its AI ambition, Chipotle loses its spice, Microsoft kind of excels, and does Starbucks have a turnaround brewing? Our take on earnings. Check. The online education business is in crisis mode. For our CEO of the week, we meet the man stepping in to rescue it. And Meta spent nearly $20 billion on CaPex this latest quarter, but it wants to ramp up to even more. Do investors now think that it's just all too much? We break it down. For Thursday, October 30th, it's Brew Markets Daily, and I'm Anne Berry. More market details to come, but first, show me the money. Is this the moment that shareholders finally demand that Meta starts telling it when that CaPex spend is going to pay off? Well, the moment that markets say we need to see returns is it right now, because Meta just posted third quarter revenue of about $51 billion, up over 25% year over year, with that strong top-line performance driven by continued resilience in its advertising business and engagement across Facebook, Instagram, and WhatsApp. CEO Mark Zuckerberg said in the earnings call that Reels alone has hit annual run rate revenue of over $50 billion. Now, Meta's headline profit number did come in below expectations, hit by a one-time tax charge of nearly $16 billion. But the market does tend to look through one-timers, without which earnings per share easily beat expectations. So with all of that good news, why has $230 billion of market cap been wiped from Meta's valuation in the past 24 hours? That's a 12% drop in the share price. Well, the problem is the enormity of Meta's newly announced capital spending plans. Full year 2025 CaPex will now reach $70 to $72 billion, up by as much as 10% from its previous guidance. And CFO Susan Li made clear that the investment wave isn't slowing anytime soon. She said that she expects CaPex to grow, quote, notably larger in 2026 as Meta accelerates spending on artificial intelligence, infrastructure, custom chips, and data center capacity. Well, throughout the analyst call, executives described these investments as essential to prepare Meta for the next era of AI, both to train its own foundation models and to deploy AI-powered products across its apps. Now, all of this front-loaded spending will weigh on near-term margins, something the market never likes to hear, with cloud expenses and employee compensation costs going up next year too. Meta defended all this as positioning itself for leadership if, quote, frontier AI or even superintelligence arrives sooner than expected. And the company argued that in any case, the upgraded infrastructure will optimize its core businesses in ads and content delivery. Still, investors are wary because while Meta was heavy on managing market expectations to lots more spend, it was light on real details for the returns to come from it. And there's one more note from that earnings call that caught my ears. Regulators are still wrangling with Meta over privacy concerns. And the CFO said that, quote, in the United States, a number of youth-related trials are scheduled for 2026 and may ultimately result in a material loss. Well, come back here tomorrow because I'll be in conversation with Faye Ayosatoluno, former CEO of Tinder, to talk about AI in consumer technology and its possible impact on young people and on all of us as money pumps into the space and investors press for returns. Coming up, how did Microsoft and Alphabet's earnings compare to Meta's? We look at two more of the Mag 7, plus we whet our earnings appetites with a taste of Chipotle. But first, a word from our sponsor, Surf Air Mobility. The transportation industry is evolving, and our producer John is here to explain how.
Surf Air Mobility believes they are redefining short-haul aviation with a combination of AI-enabled software and future electrified aircraft. Their software platform, Surf OS, is designed to improve the efficiency and reliability of air mobility.
Powered by Palantir, Surf OS aims to streamline flight operations, connecting airports that are often underutilized to enable faster, more accessible air travel.
Surf Air Mobility's approach aims to address the air mobility market, which is estimated to reach $100 billion by 2035.
For more details about Surf Air Mobility, visit surfair.com/morningbrew. This is a paid advertisement for Surf Air Mobility, Inc. Full disclosures in podcast description. Well, we are off to the races with earnings season, and we thought to dig into a couple of the big ones that caught our eye. Starting with, let's go with dining, because we have seen Eat, that's Brinker, do pretty well so far this earnings season, John. Chipotle, on the other hand, that's ticker CMG, that's for Chipotle Mexican Grill. Market cap $45 billion, shares down a whopping 20% this morning, hot off the earnings coming out. It did ease back closer to an equally disappointing 15% down, and it's down 45% year to date. Well, just to set the stage a bit, total revenue increased by 7.5% to $3 billion, but that's mainly because there were new restaurants that were opened, right?
Right. They opened up 84 new restaurants.
Same-store sales, though, which is the golden metric. This is what everybody looks for in both retail and restaurants, because that is for a store that's been open for at least 12 months. You're truly looking apples to apples. They were essentially flat. But the key kicker here that really got everyone down is the company lowered guidance and said that it expects full-year comparable restaurant sales declines in the low to single-digit range. Now, look, this was once a golden child. It had a stellar CEO who went over to Starbucks. We're going to come back to that in a moment. But at the moment, Chipotle is just really struggling.
That's right. And the CEO on the call said Chipotle is over-indexed to a younger consumer who is particularly under pressure. So we keep talking about this. People are spending less and the consumer. But I found this one thing interesting. I live here in Manhattan. I don't own a car. I did not know that there are things called Chipotlanes, which is the drive-thru for Chipotle. And so there does seem to be a little bit of hope there on the earnings call. Quote, they continue to perform well and are helping enhance guest access and convenience, as well as increase new restaurant sales margins and returns. So that's one area that Chipotle is trying to expand. But again, it seems like it's fast casual is taking a big hit this summer. We've seen the numbers down ever since July, and Chipotle is no exception.
Yeah, and just interesting that these Chipotlanes, to your point, are in areas where people are much more using their cars to get around, where we're really seeing a hit in fast casual. We're seeing it too in Carver. We're seeing it in Sweetgreen, is in the urban centres by the office blocks where folks, walking to go pick up their lunch. That's where people are saying no sandwiches made at home will do.
How do you think the drive-thru works? Because isn't part of it where you lean over the sneeze guard and you point at the protein you want? And I don't know how that works.
I think there's app magic to some of this. Well, let's talk about Starbucks and talk about, again, that all-important same-store metric, because Starbucks released earnings today. Profits missed forecasts, but the CEO really tried in the media rounds today to focus everybody's attention on, yes, same-store sales growth, because the company had its first positive quarter of that in nearly 2 years. So sort of middling good news. I personally thought this was a fairly mediocre sign that good things were to come, and the share price, though, did nudge up 1% today in response to that.
And that's also positive on a global scale. So it was pretty flat in the United States and then a little bit of growth in China.
It's interesting. I saw Brian Niccol, the CEO of Starbucks, getting interviewed on CNBC this morning, and he made quite a concerted effort to sort of give a shout out to the team in China, saying they're really trying to figure that market out. Earlier this year, he'd announced that he was looking at strategic alternatives for the Chinese business. Partnerships. The company's been losing share to Luckin Coffee, which is a local competitor, had been rumored to be on the chopping block, so sort of up for sale is one option that's being explored right there. So we'll keep on watching this one. Again, also to see, can Brian Niccol do at Starbucks what he had done before he left Chipotle, which was really get that business humming, including, I think, getting Chipotlanes off the ground. Let's take a look now at the Mag 7. Always important. I know that people, I think, are getting a bit of Mag 7 fatigue, John, and we see that in some of the comments, actually, that folks send us after listening to the podcast or watching us on YouTube. Nevertheless, it is 30-ish% of the S&P 500. So here goes, starting with Microsoft. Market cap nearly $4 trillion, right around Apple, Nvidia, of course, knocking both of those off the pedestal. Revenue at Microsoft up 18% to $78 billion, beating estimates, as it also did when it comes to earnings per share, which again saw a beat, but they're by 12.5%. Now, the areas that really saw, I think, sort of outsized performance relative to expectations was revenue in productivity and business processes hit $33 billion, which is an increase of 17%. And the reason that particularly caught my eye is that's the area I think folks in the market are really eyeing to see if AI is actually paying off in a tangible way.
Right, that's very interesting, and that includes the Microsoft 365. That's their classic software enterprise
The
business.
Office suite, yeah.
Yeah, the Office suite. And I just want to point this out. I was looking up Microsoft's earnings information today. So I went to their investor relations website and I wanted to see their slides, the press release, financials. And of course, I was unable to open any of them. I don't have the Microsoft 365 on my computer.
On your Mac, right?
Yep, that's right. And it's an Excel spreadsheet, it's a PowerPoint document. So hats off to Microsoft. They're not putting these things in a PDF. You have to convert them if you want to see those earnings. So that's one area. But of course, the other one where things are doing well is the cloud.
No, exactly. Can I just, before we talk about the cloud though, can I just do a massive shout out to our producer, John, the music to my ears that you went to the investor relations website and tried to download all the primary information. One of the things we do try to avoid is other people's headlines. We do like to go straight to the source. We love going through earnings calls transcripts and actually getting into that underlying source data itself. Well, the cloud, as you say, it was a standout for Microsoft. Azure Cloud saw revenue up 40%, topping estimates, which was a relief actually, because I feel as though, outage on Wednesday when it came to Azure services, businesses around the world are being impacted. I really think if cloud revenue at Microsoft hadn't been stellar, people would have absolutely jumped on that and been really stressed about it.
Without a doubt. Would have been very bad timing, which was pointed out. And then also this week, the news was about Microsoft's investment in OpenAI. OpenAI restructured. And so I just want to recap that. Microsoft has committed $13 billion investment into OpenAI. That's a 27% stake. And the terms of the new deal, OpenAI has committed to spend $250 billion on Azure. And so that's where that money is coming in. So from the cloud. So things like ChatGPT queries are going to run on Microsoft's cloud infrastructure. And on Wednesday's earnings call, the CEO, Satya Nadella of Microsoft, said the relationship with OpenAI is, quote, one of the most successful partnerships and investments our industry has ever seen. We continue to benefit mutually from each other's growth across multiple dimensions.
So I've got to tell you, that word mutually jumped out. And another word for that is circular.
Sure.
I think it's the kind of thing that the market's looking for at the moment. I think they're trying to read between the tea leaves. So just to go back over the numbers you just articulated, John, $13 billion committed by Microsoft to OpenAI. It's an investment it's made for 27% stake. OpenAI committing to $250 billion spend back with its investor Microsoft. These are the kinds of things that's getting a lot of attention at the moment. Now, the Microsoft share price was down 2% this morning. There is just a little nervousness, as we've seen up the top with Meta. It feels like it's extending over to other names in the Mag 7 just because there's been such a great run. Microsoft is up 25% year to date off the back of already strong 2024. So the stakes are high, expectations are high for these. Also high for Alphabet.
Yes, and they delivered according to what the markets saw today. They're obviously the parent of Google, ticker Goog, and the market cap is $3.4 trillion. Their shares were up as much as 5% today, and Alphabet is up 50% year to date.
Why do I find Goog so funny? I mean, I just say that ticker all the time. I still get a chuckle out of it.
It's hilarious.
Okay, good.
And so Google, Alphabet, I should say, hit record revenue of $102 billion, which beat expectations. And on the earnings call, Alphabet CEO put that $100 billion in perspective, saying, quote, 5 years ago, our quarterly revenue was at $50 billion. Our revenue number has doubled since then, and we are firmly in the generative AI era. Alphabet raised its estimates for capital expenditures, so that's the thing we keep talking about, spending on AI, to a range of $91 to $93 billion. Last year, they spent $52-ish billion, and so they're nearly doubling their AI spend.
I just want to hone in on that quote from Sundar Pichai, the Alphabet CEO, and just to say that again, what John said. 5 years ago, our quarterly revenue was at $50 billion. Our revenue number has doubled since then, and we are firmly in the generative AI era. I think one of Sundar Pichai's superpowers is the art of storytelling, right? The way that he just broke that down into a soundbite that everyone can understand. It feels very impressive. It is objectively impressive, and we can really intuitively understand it. More CEOs are going to have to do that, I think, in order to get the message across on why this astronomical amount of CaPex is justified. Well, just like Microsoft, Google's cloud division popped just over $15 billion in quarterly revenue, up 34% year over year. Cloud is something people have been watching very closely to see if those high double-digit growth rates can be sustained. Now, the one area that we were keeping an eye on is search. Right, we've actually talked a lot, you and I, John, about what ChatGPT and Gen AI might do as folks start to substitute those apps for the traditional search engines. But it looks as though Google's doing all right so far. For the last quarter, reported $56.6 billion in search revenue, up nearly 15% year over year. That being said, this predates the launch of OpenAI's Atlas browser.
That's right.
Right. And I didn't see much conversation around it in the earnings call transcript today, but definitely looking out for that as we go into the end of the year.
Exactly. A highlight on cloud. And then sometimes you forget this is such a big company, Alphabet. They also have Waymo. And so I just wanted to point out to you that Waymo aims to open service in London coming soon. So maybe the next time you visit there. And they're also expanding domestically Dallas, Nashville, Denver, and Seattle on the docket.
And also to your point, there's so much going on over there. Let's just talk about YouTube for a nanosecond. Brought in $10 billion in revenue, up nearly 15% year over year. YouTube is eating our eyeballs.
Yes. And more about that later when we talk about the markets. And just to put a wrap on the earnings roundup, we love hearing from the audience.
Yes.
What companies they want to hear us cover. Put it in your comments or send us an email. Next week, we're going to hear from Palantir, Shopify, DoorDash, Live Nations, and hundreds of other more companies. So drop us a note if there's one that you want to hear about.
We'll break it down. Meantime, let's take a quick break. And when we come back, AI leaves Chegg on the brink of extinction. Can returning CEO Dan Rosensweig save it? A textbook company at risk of extinction seeks a CEO who's brave or foolhardy enough to take the job. Well, someone has stepped up to the seat at Chegg. And as far as turnarounds go, this one is set to be so hard that we wanted to dig into who exactly it is who signed up to try it. Well, to set the stage, let's take a look at Chegg, whose share price is down 98% over the past 5 years. Well, the online education company, founded 20 years ago, started life as a textbook rental business, and it challenged the stranglehold that incredibly expensive textbook publishers had on getting learning materials to students. They were democratizing access to learning materials. Well, Chegg went public in 2013 and added homework help and tutoring to its services. And when you look at its stock price, it hit a high of nearly $114 a share in February of 2021, boosted, of course, by a shift to remote learning during the COVID pandemic. But since then, the stock has wiped most of its value, and in April of this year, it risked being kicked off the New York Stock Exchange because its price was so low. So that market cap, which peaked at nearly $15 billion, sits today at only about $110 million. What a crazy fall. Well, it is a textbook example, yes, pun intended, of how technology can so quickly disrupt the disruptor. Because in May of this year, Chegg laid off 22% of its workforce, citing increasing adoption of AI as the reason. And its revenue has continued to drop, resulting this week in Chegg laying off another 45% of those who are remaining. Well, at the same time, the company announced that its CEO, only 18 months into the job, although a long time at the company before that, is being replaced by his predecessor and executive chair of the board, Dan Rosensweig. Now, Rosensweig is no stranger to bobbing and weaving between old school and tech-forward industries, which is a good thing. So let's take a look at what he's done. In 1983, he began working at Ziff Davis, selling magazines, yes, print magazines, to independent computer retail stores by cold calling them. He worked his way up to become publisher of PC Magazine, successfully expanding its readership. And then his path evolved from there on, from print media to digital. He had a leading role at CNET, a technology review website. And then in 2002, he went over to online search, becoming chief operating officer of Yahoo, remember them, for 5 years. After that, he had a quick stint at a private equity firm called Quadrangle. And then after that, another very quick stint as just under a year as CEO of the rhythm game, Guitar Hero, which, by the way, I loved reading about because I love Guitar Hero. Well, in 2010, he started his 14-year tenure at Chegg, taking it public and diversifying the business model. So when you take a step back, Rosenzweig's done a lot of moving around. He's seen a lot in different roles, and he's seen them in different changing industries. He's also familiar with struggling public companies. He sits on the board of Rent the Runway, which has seen its share price drop almost 99% over the past 5 years as it struggles to make a profit. It's been on the brink of bankruptcy several times. And he's on the board of Adobe, share price down 24% over the same period as it wrestles with competition in generative AI. But whether Rosenzweig can be part of the solution rather than being there observing all these problems remains an open question. Now, on the same day that he became CEO, Chegg released a statement saying that it spent a year evaluating, quote, a range of potential outcomes, including being bought and going private. But it decided, I put this in air quotes, to remain a public standalone company after, quote, thoughtful consideration of multiple proposals. Look, I know nothing about what's actually going on inside this business, but here's one person's view. I'm pretty willing to bet that no one turned up to buy it other than an absolute bargain basement price. This company is low on cash, it's burning what little is left, and investing behind it doesn't look appealing without a clear strategy for dealing with AI. So can Rosenzweig change people's minds? We're not going to know for a while. We're certainly, though, going to keep on watching. Well, it's 4 p.m. on the East Coast. The market's wrapping up. There's the closing bell. We don't have a ticker tape, but we'll throw it over to our human ticker, our producer, John.
That's right. Indices all down across the board today. The S&P 500 was down 1%. The Dow was down 0.25%, and the Nasdaq finished down 1.5%. And of course, we talked about Alphabet and YouTube a moment ago. YouTubeTV now has about 10 million subscribers, and it is flexing its muscle over a carriage negotiation with Disney. The two sides have until midnight tonight to reach a deal to keep Disney properties like ABC, ESPN, and FX on YouTubeTV. I'm aware of the situation because the New York ABC channel has been running warnings during Jeopardy, and Disney is just the latest, as in the past few weeks, YouTube has had carriage showdowns with Fox and Comcast's NBC Universal. Oh, and about Comcast, its shares were down over 3.5% today as the company announced its earnings that it lost 104,000 broadband customers last quarter alone. Big changes come to the way media is delivered.
Lots and lots going on there. Well, a final thought today. We couldn't wrap the show without touching on what's going on in the trade wars between the United States and China. President Trump and China's Premier Xi Jinping have just wrapped their first in-person meeting in 6 years with a slight reduction in U.S. tariffs on Chinese imports. Now, in return, China has promised to take, quote, very strong action on chemicals used to produce fentanyl, also agreed to buy large amounts of soybeans, which is very important for the agricultural industry here in the US, and has also agreed to ease some, details to come, controls on exports of processed rare earth minerals for a 1-year period. Just to zoom in on that, China sits on about 70% of access to the world's rare earth minerals and controls about 90% of processing this incredibly precious stuff. And just one other nugget that I'll sort of let in there. I was at actually an event at JP Morgan this week listening to some of their leaders talk about trends that they're seeing. And one factoid that was presented by one of JP Morgan's speakers is that China graduates every year more engineers than the entire West combined. So if you think about that race for leadership in STEM and in science, it really is intense. Well, US levies on Chinese imports will, after these concessions, still sit at historically high levels of 47%. And look, as we know, this Trans-Pacific relationship is volatile. We have no idea if this is going to stick. The details are pretty limited. We've got some high-level nuggets today. But we're going to keep watching because one other thing that's really important here, President Trump did tell reporters that another topic that had been discussed as part of this conversation was how to bring an end to the conflict in Ukraine. That's it for today's Brew Markets Daily.
Brew Markets Daily is hosted by Ann Berry and produced by John Crotteau, Tariq Abdellatif, and Emily Milliron. Our technical director is Lonnie Fiscus. Jim Orzo handles audio, and the president of Morning Brew Inc. is Devin Emery.
Wake up tomorrow with the Morning Brew newsletter and tune in to Neil and Toby on Morning Brew Daily. We'll see you back here tomorrow, same time, same place.